You'll quit faster than you'll start if you're overwhelmed with information, okay? Well, at least for me, I got ADHD. I got ADHD. I can't be Let me put a disclaimer. I'm not the type of person that's gonna tell you, hey, you finna start trading options contracts today and you're finna make $100,000 today. No, I'm not that girl. I can't even because if you have spent hours and hours on YouTube scrolling videos on options tradings and you still don't get it, that's okay. You're probably looking like him. He's confused. He don't understand it. It's so much overwhelming information at one time. But I promise there is light at the end of the tunnel. Because you can see like this guy. The guy that finally gets it. This is the day that options trading finally clicks and you're like, okay. You wake up magically one day and you get it. So if you got 10 minutes or less, guess what? I got ADHD. I don't have too much time. I lose focus real quick. Okay, so essentially, what is the stock market? Before we get too deep into it, let me introduce myself. I'm sorry. Hello, my name is Noonie. They like to call me the CEO. I used to make a lot of money drop shipping. I come from the poorest of the poorest family, and I made a name for myself just helping other people make money. I was a very successful drop shipper. The stock market is not going anywhere. And guess what? If you're trading options, you can make money whether the stock goes up or down. But for you to understand options trading, you first must understand how the stock market works. So let's get into it. The stock market is the place where people buy and sell shares of the company. Basically, when you're buying a share, you're purchasing a small portion of that company. The good. If the company does well, the value of your shares can go up and you'll basically make the profit. The bad, because there is bad with owning stocks. If the company doesn't perform well, the value of the stock goes down, which means guess what? You're losing money, okay? The stock market is a marketplace, okay? It's just full of transactions. Selling, buying, selling, buying. The news affects the stock market. It's so many things that affect the stock market, okay? Let's go into our next thing, which is IPO, okay? We got to understand what the IPO is. IPO is the initial public offering. It is basically, let me go back because that went way too fast. I got ADHD, but it ain't that bad, okay? Come on now, get it together. IPO is basically when a company goes public. It's basically launching this company for the first time in public. You are able to jump into their stock. They're basically earning money from you to help their company grow. That's what IPO is. Okay. So when a company goes and it now has a stock, it went IPO. It's on the stock market. You're investing into that company. They're using that money to invest back into their company. And basically, you're helping that company grow. That's what a stock is. That's what IPO is. That's the gyps. I'm not going to spend too much time on IPO because we're going to get back into that. Okay. We're going to get back into that. But again, I said this video is going to be 10 minutes or less. Okay. So, why do you want to trade options? Why would you want to trade options when I could just buy a stock? Because again, if the company does not perform well, are you really making money? No, you're not. However, with options, whether the company is doing well or bad, if you're predicting the price to go up, you're doing a call and you're making money off the prices or the stock going up. Guess what? It's the same for if the stock goes down. If the stock prices go down and you predict that the stock prices is going down, you're still making profit of the stock going down. Not the same as if you were holding a stock. Not saying you don't want to hold stocks because there are some long-term stocks that you want to invest in, but we'll get there. Okay, so let's understand what calls and puts are. Call, you predict the stock price to go up. Hey, I'm looking at this chart and you'll get to understand how to read a chart, but we're going to cover the basics. I'm going to keep it very simple. Okay? Because I know when I started to study the stock market, an overload of information just made me shut down. I got to the point where I was like, this is too much. And you'll quit faster than you'll start if you're overwhelmed with information, okay? Well, at least for me, I got ADHD. I got ADHD. I can't be After a while, I'm bored. I don't understand. My brain stops grasping what's going on, okay? The same thing with puts. If you predict the stock prices to go down, that's when you're gonna buy a put, okay? I hope I ain't lose y'all yet, because I tried to make this very simple for y'all. So if I'm doing well, make sure you subscribe because I need y'all here, okay? So let's talk about the different things that can happen. So with a option contract, you basically have the right but not the obligation to purchase 100 shares, okay? When you're buying a contract, you're not buying one stock. You're buying 100 of those shares of that stock. So, essentially, let's just say you see a contract for $2.15. It's not actually $2.15. It's $2.15 times 100 because you're buying 100 shares of that stock, right? Okay. Hope I didn't lose you. All right. So, example, Ulta is currently trading at 385. You predict that the price to go down to 350 in 1 month. So, you purchase a put option for $50 with an expiration date 30 days from now. You can sell that contract and collect a profit any day before the expiration date, okay? Any day before. Okay. You're collecting profits just because you're buying an expiration date that is, sorry, it's moving too fast over here because I told you I got it on a timer. It's supposed to be 10 minutes or less, okay? So you can sell that stock at any time before your expiration date. You do not have to hold that contract till your expiration date. So let's just say you purchase that stock or that contract today. You profit $300 in 1 day and you feel like, okay, I'd rather be safe than sorry. Let me take my profits and go. You can. That's the good thing about options. I love options real bad. I love options real bad. I don't know. I love options real bad, y'all. Can't nobody tell me options is not where it's at. Love options, okay? All right. That's essentially what options are. You're literally predicting prices to go up. You're buying a contract, making profit, selling the contract. You're predicting prices to go down. Same exact thing. It's that simple. I don't want to overwhelm you because it can be a lot. Once we get into graphs and the chart and key levels and all of that, it's gonna go pretty fast. But I told you one day you're gonna wake up and you just gonna get it. The good thing about options trading is you have the opportunity to paper trade. So I like to use Webull. Webull has paper trading. Thinkorswim also has paper trading, but Thinkorswim's platform is a little bit difficult in my opinion. It's a little bit more for advanced traders. So let me go back a little bit. There's different platforms that you can trade on. My three favorite are Webull, Robinhood. Yes, I know nobody likes Robinhood, but it has the simplest interface ever. It's for beginner traders. I started on Robinhood. Again, I am self-taught. Judge me if you want. It's fine. It's fine. But and then you have Webull. I like Webull. Webull's interface is really easy. It's a little bit more advanced than Robinhood, but it's amazing. Webull, you're able to paper trade with basically you're using money that's not yours, not your real money, but you're able to get in and out of contracts with this paper trading. I like paper trading because it gets you comfortable with getting in and out of contracts. Because again, you can be in profit in 1 minute and then the next minute you done lost all your profits. So it's good to practice getting in and out of contracts, okay? All right. When you buy contracts, it's going to look like a lot. It's going to look really overwhelming, but you're going to get it. This is what it looks like. Example. All right, so when you're buying a contract, if you look at the left side where it says your positions, you bought a $80, you bought a put with a strike price of $80, right? With the expiration date at 6/28. This is a 1 day contract. So basically the expiration date is very close. When the expiration date is closer, your contracts are cheaper. However, you can still buy contracts that's out of the money. I'm going to explain that, I promise, on another video, but just stay with me. The further out you buy your contracts, they're expensive. The closer your expiration date, they're cheaper. So you bought one contract. No, you bought 100 contracts on this. We're just taking this screenshot. You bought 100 contracts. The average cost is 4 cents. Going to multiply that by 100. So you're actually paid $4 per contract. You bought this contract and you profited $28,000. All right. That's how cheap you can buy contracts. Of course, the more contracts you buy, you profit more. Did I lose you? I hope I didn't. I hope I did. Because a lot of people have the notion that you have to buy or the contracts are expensive. You don't have to buy expensive contracts. You can buy contracts out of the money. The further out of the money contracts are, the meaning the further out the price is, they're cheaper. It's different with expiration dates. The further out the expiration date, the more expensive. So you use that to your advantage. And again, this might be overwhelming, but one day you're going to get it. Let me put a disclaimer. I'm not the type of person that's going to tell you, hey, you're going to start trading options contracts today and you're going to make $100,000 today. No, I'm not that girl. I can't even, because everybody be selling courses and all of that saying that you're going to make all this money when you first start. It's not, you might get lucky, but it's not, we're not doing that. You got to be realistic. The thing about it is you want to learn how to trade responsibly because those smaller profits do eventually turn into larger profits. Okay. So I'm going to do a part 2 of this video, but I need you guys to subscribe. If you love this video, you guys, if you love this video and you want to see more videos like this for beginners, make sure you subscribe. That's all you got to do. Just subscribe. Subscribe, child. If you subscribe, I'm going to be here. All right, y'all. So thank you for watching my video. I will see you guys next time.